Thursday's market sit rep here at T3 Live. Matthew Buckley, the chief option strategist. I got a lot going on today. The IMF officially came out today, and for the first time since Ulysses S. Grant was president, America is not the leading economic superpower. For longtime viewers of my sit reps or longtime clients of Top Gun Options, you know this. It's China. I called this 3 years ago, maybe even 4 years ago. I said China is going to overtake the United States as the world's number one economic superpower by 2015. I was wrong. I was off by a month. The IMF said it, and it's December. I was off by a month. And, of course, Chinese stocks see their best day since 2012. Small investors are getting back into the rally. Our positions on FXI are looking great. Look at this one long call diagonal that we're going to probably close in a couple weeks here, up $8,200, and that's in about maybe about 8 months ish. That trade has averaged about $1,000 a month in returns. Long-term bullish on China using a long call diagonal. Market is also higher today on news out of the ECB. Mario didn't necessarily turn the cannon on today, but 2015, I think, is when Mario is going to jump into the pool here. I mean, Goldman Sachs had a really good take on it. We read this as implying a higher degree of commitment to balance sheet expansion and thus as a further signal towards additional asset purchases. Okay, so Goldman Sachs more or less pushing Mario a little bit in the back, saying, "Yeah, you're gonna come out with some QE here." We expect Mr. Draghi to announce and implement a sovereign debt QE program during the first half of next year. Okay, so it looks like Mario's eventually going to jump into the QE pool just like everybody else. But this is very interesting that the Treasury's Office of Financial Research issued a warning about the lack of market liquidity, the high potential for market reversal, and that retail investors and traders are taking low volatility for granted. And I couldn't agree more. This just makes no sense. Let's take a look at what our fear altimeter is doing today. With the market essentially flat this afternoon, the Dow essentially flat and the SPOOs are flat. The VIX is more or less, and we have our mantra here, folks. When vol's cheap, you buy it. When it's expensive, you sell it. Look at this. We're getting almost below our resting heart rate. 1213 has kind of been that resting heart rate, and whenever we hit these levels, we hang out for a little bit, and then something happens to freak the market the hell out. Well, we've seen an extended period of time where the market hasn't been freaked the hell out. We're going on about 2 months here of peace, love, and understanding, and we saw a period like this earlier in the year. When we saw, I'd say about 4 months of an extremely low volatility environment right there, and right there. So April, middle of April, all the way to the end of the summer, it seemed like nothing was ever wrong, right? The VIX went from around 12 and a half, 13-ish, all the way down to 12, 11-ish, even saw a 10 print a little bit. That makes no sense. With everything that's going on in the world, China that is, I don't care what the retail investor is doing in China. China's slowing down. Industrial production numbers, manufacturing numbers. Europe is slowing down. The United States, the world is an absolute clown car right now. But the market has absolute faith that central banks are going to rescue us from anything bad. And that is incredibly, incredibly dangerous. But you got to trade the tape. Here's what we got going on here in our weekly options model portfolio. We have an Apple bull put spread that's up 83% since Monday, $2,200 gain since Monday on that trade. We have a Google bull put spread that's up 75% since Monday, or $1,400. And we have a SPX Iron Condor that's essentially flat right now. It's only up $100. As long as we stay below 275. 2075 by tomorrow, and I think the jobs report might shake a little weakness out of this market here. This trade has the potential to make, where are we? About $3,400. So we're looking at nearly maybe $7,000 in weekly options profit on 3 trades. As long as the world doesn't end tomorrow, we should be good to go. So really liking what's going on in our weekly options model portfolio and the rest of our portfolios as well. This is our primary live trade brief model portfolio, and up almost $22,000 year to date. And month to date, well, month to date it's December 4th. We're up about $30,000. Really, really nice move in the past couple days here. Okay, all right, I got to run. I'll be back with Friday's market wrap up here at T3 Live and TopGunOptions.com. We'll see you.